Donald Yacktman is the president and chief investment officer at Yacktman Asset Management. Their focused fund has beaten 99% of its peers over the past 5 years, and Don was a Morningstar nominee for Fund Manager of the Decade. He joins us now, and we're glad to have him. Don, thanks so much for coming to the show. Let's kick it off, because we want to talk really about what you own and why. Let's kick it off with banks. You stay away from the big banks, but you do own U.S. Bancorp. Why that one and not the others?
Well, that one really is a little different business model, and I think it has a lot lower risk profile. There aren't a lot of bad loans in North Dakota.
So it is. Don, I mean, it's a completely different beast, is it?
It is.
You don't have to worry about their transparency.
Most banks are, yeah, most banks, the problem is that you really don't know what you have. They're a black box, and it's difficult. I defy anybody to know what's totally in Citicorp.
That's a good point. I mean, do you think at some point, let me just ask you about those financials that we don't, as you say, really know what's in them, that they're going to come back and bite investors again big time? Or does Oz ever come out behind the curtain for the financials?
Well, I think the dilemma is that you're going through a period of transition where they have big spreads, but on the other hand, they have big write-offs, and they haven't had to market their assets. And so this is a way of kind of hiding the problem to some degree and not forcing them to add more capital. But I think it's just going to take time for it to roll through.
I'd love to talk about media, because we've spent a lot of time this week with all the media earnings coming out, talking about what's going on at the media companies. That apparently is your biggest sector. News Corp is your largest single holding. Why are you so heavily invested in this area?
Well, it's mostly valuation, but in the case of News Corp, which is one of the 4 oversized positions in the focused fund and one of 2 in the Yacktman fund, that one is moving from a business model standpoint more and more to a fee-driven business as opposed to an ad-driven business, which we think raises the quality level of the business. What about, it's still a low valuation.
So it's not that you favor media in general. You don't think that media, for example, is best equipped to weather another slowdown, or that News Corp is best equipped among the media companies to withstand another slowdown?
What we do, again, is try to look at stocks. Well, first of all, there are 2 questions. What do you own, and what is the business, and how much are you paying for it? Those are the 2 questions you ultimately have to answer. From a business model standpoint, we think they're above average businesses, way above average businesses, and they're selling at way below average prices, but particularly News Corp.
See, I always think, Don, when I first interviewed you, maybe you told me you really care about what a management team does with its cash, whether it pays it back to shareholders in dividends or buybacks, whether it uses it in acquisitions, whether it reinvests in the business. And when I think of News Corp, I think of a company that spent $5 billion to buy the Wall Street Journal. Newspapers kind of, some would say, a dying business. They spent a lot of money to buy MySpace. It didn't go anywhere. Fox Business News, the network, nobody's really still sure what they're doing there. I mean, it's interesting to see what News Corp is doing with its cash.
Yeah, and any business management team has a batting average. And you've pointed out some of the, I don't know if you would be foul balls or strikeouts or whatever, but when you look at Fox, when you look at the Fox network, where they took it from nothing to #1 network at one time, or the Fox News station, which is now bigger than CNN and MSNBC combined. I mean, you have to give them a lot of credit for that. The financial network will be interesting, because a year from now, CNBC and the Wall Street Journal's deal is going to have to be either canceled or renewed. And it may be they shift a lot of that emphasis into that and try to develop that particular business. I don't know. We'll see. Yeah. I think it's going to be intriguing.
We're very interested to see what they do.
We never give competitors credit.
I can't imagine why.
I want to talk commodities, Don, because they're down today, but they've really been on a tear since mid-March. And I wonder how much this plays into the businesses that you buy, how much it plays into the thinking that you guys do in your investing, because it definitely changes in a big way input costs for a lot of your big holdings. I'm thinking Pepsi and Procter Gamble, but obviously it changes things for everybody.
Yeah, I think commodities are a real big issue, and longer term. And I think that like one of the things that we have done as a nation just defies me when you think that 40% of our corn crop now goes to make ethanol, which is being subsidized by $5 billion or something like that. Some enormous amount of money. It's an inefficient way to use a great commodity, and so in the process we're tying food to energy prices now, which doesn't seem to make a lot of sense. But I think that companies like Pepsi or Procter basically will just pass along those increases, and some people say, well, doesn't that mean that people are going to move away from that? Well, think about it. I mean, if they move away from those things, think about the implications for everything else.
All right. So you're saying, I mean, these guys have leverage, even if they raise prices. I mean, we know that they are. We know P&G just recently said that they're doing that. I mean, so you're comfortable that they have leverage in their ability to do that?
I think they have pricing power. And if you go back really long term, I mean, think about the Federal Reserve, which will hit its 100th anniversary in 2 years. And the dollar is now worth about, what, 5 cents or 7 cents compared to what it was 100 years ago? Most of that's in the last 80 years since going off the gold standard. But, I mean, we're going to have inflation. It's inevitable. And I would much rather own businesses that have pricing power than a government bond.
Do you think
you now have yields? You now have yields on several of these companies that approaches 10-year treasuries.
Do you think, I always wonder about inflation hedges, and a lot of people used to talk about gold as a big inflation hedge, but do you think stocks, equities are the best inflation hedge?
Much better long term. Yeah, I just think gold it's a supply demand, and it's a commodity that, I mean, it doesn't, other than psychologically, and gold has some uses, I mean, jewelry and for in teeth and so on, but it's not a practical thing. Silver has more practicality, although a lot of silver went to film, and of course that got dramatically reduced as we're going to a digital format, particularly X-rays.
Plus, you never know.
So
what the
I'm not enamored with. Yeah, I'm not enamored with gold. I'd much rather own Coke and Pepsi and Procter Gamble than I would, and News Corp than I would gold.
And we know you own Microsoft, but we're running out of time. So, Don, we'll get you back real soon and talk a little bit more about that holding. Don Yacktman joining us.
You're great.
With some good stuff. Thank you, Don.
Thank you so much, Don.